The stock market took a little bit of a breather here to digest yesterday's gains after finding out about the Moderna vaccine news. We did hear some additional interesting developments in the pharmaceutical world today. We heard that Warren Buffett and Berkshire Hathaway took some major stakes in pharmaceutical companies. We also heard that Amazon is going to be competing directly against Walgreens and CVS and other pharmacies with their online pharmacy project that they've got rolling out. So those stocks were in focus. Healthcare actually was one of the worst performers here today. Energy was one of the best performers today. Also, small caps continue to outperform their larger cap brothers and sisters. So we'll talk about all of that, see how it affects our posture. Then we'll get into our trade application example where I wanted to focus on a communication stock from the bearish side of the coin. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's November 17th, 2020. First of all, if you're new, remember to go over to YouTube, click subscribe on our channel, then make sure you're signed up for our email distribution list. If you're not already on that list, feel free to check out our description area to sign up for it. Also, we're heavy users of Twitter. Feel free to follow me. My handle is @BrandonVanZ, and we really appreciate those of you that click like and retweet on these Market Outlook related tweets. And then last but not least, we have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's action. And as you can see, I've got chart 4B pulled up here in front of us. This will give us a good bird's eye view of the four major U.S. equity indices. And remember, the background colors of the charts on this particular chart setup will tell us whether we have a bullish or bearish posture using the intermediate line on the market forecast technical indicator that you can find over on the Thinkorswim platform. So as it stands right now, you can see the background colors of all four of our charts remain green. Not only green, but dark green, telling us that we have a strongly bullish posture. That's intermediate term trading that we're thinking in terms of that particular line and that particular posture. Of course, anything can happen in the shorter term, and that's what happened here today. We saw the S&P 500 down 0.48%. The Dow was down 0.56%. Remember, Walgreens is a company that got hit on that Amazon news today, so that was one of the worst performers within the Dow there. And then the NASDAQ was down 0.21%. And then here's kind of the surprise, not necessarily if you've been following these presentations in recent weeks, but for some folks it might be a surprise. The Russell 2000 continues to roar. It wasn't a huge up day for the small caps, but it was up another 0.37% today. So on a day when all the rest of the indices were down, the small cap Russell 2000 was up yet again. Not only that, but we hit all-time highs in the Russell 2000 today. You can see that high label showing up again above the candle. You can also see that light green label showing up right above it that says yearly high today. And that's not just a yearly high, it's an all-time high. Remember, the Russell 2000 was a bit different than the other indices in that it didn't have a new all-time high until this most recent move off of this moving average here. Its prior all-time high was a few years ago. So it has been without a doubt the leading area of the market here recently. And of course, those of you that are Premium and Plus members that attend my factor-based swing trading class on Wednesday mornings, you are no stranger to that idea. We've been focusing on this idea that small caps were leading for really the better part of the last couple of months, as we've seen the low size factor rising up through the ranks and eventually overtaking momentum at the top. So that's an area that has a lot of room to run potentially, because it has lagged so much over recent years that if it's just starting to break out now, you might still be able to catch a nice wave there of small cap outperformance in the months and perhaps years to come. We'll just have to see how it shakes out. Now, one thing I did want to point out about the Russell 2000, notice it does have this red dot that showed up over yesterday's candle. Remember, those red dots are called overbought clusters. Now, just because they're overbought doesn't mean they can't become more overbought. So it's not me trying to scare you by pointing that out, just merely pointing out the facts. However, I would say that each different chart where you're using this cluster analysis presents different opportunities and challenges. Some charts really react nicely to the overbought and oversold cluster signals. Other charts not so much. I would say that judging by the information I have in front of me with the 3-month chart here for the Russell 2000 is that it is a chart that acts pretty well with those cluster signals. And what I mean by that is when those cluster signals hit, we tend to get a reversion to the mean type of a move. So let me right click on the chart, maximize that so we can see it a little bit better here, and I'll show you what I'm referring to. So notice down below here on the market forecast technical indicator that back here on September 2nd, the Russell 2000 had what was known as an overbought cluster signal. You have that red dot there in the indicator itself, and then a corresponding dot up here just to show you what candle that belongs to. And that occurs when you've got all three of those colored lines on the market forecast in the upper reversal zone on the same day. So you had the red, the blue, and the green all in the upper reversal zone above 80 on the same day there. So that was known as an overbought cluster signal. So at that point, we shouldn't have been completely surprised to see that the market eventually sold that security off, right? We were overbought here. In order to correct an overbought condition, of course, stocks would go lower. And so that is what happened right there. So that one worked out pretty well for people who were wanting to fade the rally at that time in recognition of an overbought cluster. Your bearishness at that moment in time paid off. Now, fast forward to right here on September 24th for the Russell 2000. Notice you've got this green dot that shows up down below. Now there's actually a green dot here as well. It's just that it's being covered up by this low label on the chart. So normally you would see the green dot here as well. And it is there, it's being hidden by that label. But the green dot signifies kind of the opposite. Remember, the green dot is telling us that all of those colored lines on the market forecast are in the lower reversal zone on the same day, below 20. And so that's the green, the red, and the blue line. You can see them all kind of clustered up right there on the 24th. That is what's known as an oversold cluster signal. In other words, the selling pressure had become too extreme there, and a chance of a reversion to the mean type of a move the opposite direction was greater than normal. And of course, that worked out beautifully for people who would have kind of faded the sellers here and instead started buying the market on this candle right here, recognizing the oversold condition. You basically bought the low, and you ended up not only going up as a reversion to the mean type of a move, but you actually kicked this trend into the opposite direction as well. That doesn't always happen. Sometimes you have these little reversion to the mean moves up to the moving average, and then it kicks back down again. Well, this one actually changed. It was a violent enough move where you actually changed the trend from kind of being a bearish trend into now what we recognize as a very strong uptrend that eventually hit an all-time high. Anyway, we fast forward now to this time period on October 23rd. Again, notice we've got these red dots that are showing up here, signifying an overbought cluster signal. We've got the red, the blue, and the green line all in the upper reversal zone. And should have we been surprised to then see that immediately following that we had a sell-off? No. Overbought condition oftentimes can lead to a bit of a sell-off, or at least a stalling out in price activity. And so that brings us to where we're at now, or as of yesterday. We've got this red dot here again, signifying that the green, the blue, and the red lines are all in the upper reversal zone at the same time. Now, one day into that move, we haven't seen any effect. In other words, we went up here today, and we continue to push forward. But if we start stalling out by either going sideways or going down a little bit, remember that this could have been identified as an oversold, an overbought area that we're looking at right here. So one thing that I will tell you is that I've done a lot of research on these overbought and oversold cluster signals. Now, the research that I've done is on the S&P 500, so it's entirely possible you could have different results on the Russell 2000. But what my research suggested is that the overbought cluster signals eventually led to less successful outcomes if you were hoping to fade that move. It was the oversold clusters that were the real moneymaker. And again, we had that oversold cluster signal here on September 24th. A lot of times when the markets sell off aggressively, if you're brave enough to step in and buy that market on an oversold cluster signal, you usually eventually appreciate where you were purchasing that. So we'll keep our eye on it. We do recognize that it occurred here yesterday, but we also recognize that so far it hasn't seemed to affect the mood. And remember, because the Russell 2000 has been so unloved for so long, it's possible that your big institutions are starting to finally wake up to the possibility of future outperformance from the small caps. And if that's the case, this might not be a normal overbought cluster signal here. This might be the beginning of a major move where investment managers shift money from the large cap kind of FANG types of stocks more so into these small caps. And remember, the small caps can be manipulated a lot more than these other types of companies. In fact, for a while there, I don't know if it's the case exactly at this moment in time, but at least one point earlier this year, Apple, from a market cap perspective, was larger than the entire Russell 2000. Think about that for a second. One single stock was worth more in the market's eyes than 2,000 of the smallest stocks out there. So if there is going to be a move into the small caps, it could take a while to have money rotating out of the biggest names. And if that is happening all in unison, you might have some legs to this small cap rally. So what we know right now is that the trend is strongly bullish. We also know that we might have been a little bit overheated in the short term. That does not have to wreck the longer term trend, but right now, probably not going to expect the same type of move in the next 2 weeks that we just got out of the Russell 2000 in the last 2 weeks as a result of that cluster signal that we see right there. All right, let's go ahead and take a look at another chart here. Let's take a look at the 3 green arrows chart, and this will be chart 4D. As we look at this here, good news across the board here as well. We do have 3 green arrows setups on all 4 of our charts with the background color light green in all of these cases. It signifies that the 3 different technical indicators that we study on this setup are all considered bullish at this moment in time. Price is above the 30-day moving average. The MACD histogram is above the 0 line, and the stochastics also is showing us bullish price activity with prices closing near the highs of their ranges. So all those things considered bullish, and therefore these are reasonably strong times to be a trend trader. Now, obviously, there's been a lot of shakeup that has taken place, and so there are shifting trends happening kind of below the surface. We had an excellent conversation about that yesterday in my top-down trend trading class. For those of you that didn't get a chance to watch it live, feel free to go check out the recording if you're a Plus or Premium member. But we are seeing rotations taking place, and a lot of it has to deal with this idea of the lockdown plays versus the reopening plays in terms of where are we at with the vaccine, where are we at with the economy as a result of that vaccine news, and where are we seeing transitions of money taking place. So it's good to see that on the whole. We have strong performance, even though some areas within the market are going to be a little bit weaker than they were earlier this year. On the whole, we have way more areas that were once underperforming, making up for a few of those lagging areas. That the net effect of it all is that we still have a reasonably strong market to be trend trading within. In fact, the new highs within the Market Scholars 1000 watch list that we use actually achieved a new high water mark here in the last week, as we saw over 20% of our index hitting new highs, and that eclipsed finally where we were at back in February before the coronavirus news really hit the U.S. market. So we've got excellent participation across a wide scope of stocks right now, whether you're looking at the various sectors that are out there or whether you're even looking globally. We've got a lot of global stocks rallying strongly right now, and we also have the participation from the small and the mid-cap stocks that we didn't once have. So all in all, a pretty strong market here. Let's take a second to pop on over to the internet. I always appreciate those of you that help support this product. Remember, if you guys can take 5 seconds out of your day to click like for us there on Twitter, it goes a long way. I always say that if you can get at least triple-digit likes for me, I'm going to prioritize this video, and I'm going to make sure it gets done for you. If we can't get the support that we'd like, then we can also find other things to do with our time. So if you want to help support David and I and help encourage us to do the video every single day, remember, we don't make money off this video. It's a free offering. So it does take a couple of hours out of our workday, and if you want our couple of hours each workday, then I would encourage you to support us on Twitter. It's a way you can let us know. So thank you to the 108 of you that did that for me the last time I did the video on Thursday. I really, really appreciate that. Also, over the last couple of days, I did put this dividend growth investing post together of all the increases from the month of October. Pull that up real quick here. That is available for free, so whether you're a Plus Premium or just a free basic member of Market Scholars, you have access to this particular post. I'm pointing it out right now because, holy mackerel, we had a ton of new dividend increases here last month. So if you want to kind of start sifting through those and looking for opportunities, feel free to check that out on our website. I think there were 68 dividend increases last month, so way more than what we've seen in the other months of 2020. Remember, a lot of stocks were either cutting their dividends or halting their dividends as a result of the coronavirus, but it seemed like all of a sudden in October, all the corporations woke up and said, you know what, this isn't going to be so bad. Let's go ahead and start raising dividends again. So if you want to check those out, remember, you can always come to our website, go over here to our blog area, and then click on dividend growth investing. Also, real quick here on our sector selector, remember I put this together on Friday nights, so this isn't completely up to date at this moment in time, but it gives us a general idea of where things are flowing from a money perspective within the U.S. markets. And you can see that technology fell out of favor last week. It was part of the top three grouping there kind of more recently, but then fell out of that top three to the number 4 position. I think it's falling even further this week so far. Remember, one of the areas that has not taken advantage of the vaccine news, both last week with Pfizer and this week with Moderna, is technology. As a result of technology, was one of the leading areas in the kind of the lockdown economy, where we had a lot of work from home types of tech stocks that were really benefiting from that. So we might see a bit of a rotation out of that. In fact, of course, I've been bringing that up in my last 2 presentations with you guys here as we've done bearish trades on VeriSign and IBM and others. So anyway, just be aware of that formalization of the rankings here. Also, we saw some pretty big movements in a couple of areas. Financials really bumped up higher there in our rankings week over week. They went from number 8 up to number 5. We also saw real estate go from number 10 up to number 8. So those are areas that had been kind of forgotten about for much of 2020, and they're starting to roar back here quite nicely after receiving some of that vaccine news. And so, a lot of banks that were they felt like they were kind of on the brink as far as loaning money to businesses that would eventually declare bankruptcy as a result of, the effects of coronavirus. And of course, real estate, a lot of the commercial real estate out there, whether it's office or, some of the like mall REITs and those types of things, some of them have started to recover a bit with this notion that perhaps a vaccine is closer than we had anticipated, and maybe we'll get back to our normal life again. That remains to be seen, but we are seeing more positive movements within the stock market to kind of reflect that possibility right there. Okay. Also notice, because it's going to affect our trade application a little bit later today, that the communication sector did fall 1 slot from number 6 to number 7 week over week. Let's get back on over to the Paper Money platform now and review some more charts. Let's do some 12 grid analysis now. And I'm going to go ahead and start with 5A. This will be our asset class 12 grid. So as we look at this here, you can see quite a bit of green on the board. I think some of the more interesting or impressive areas from my own mindset is what we're seeing up on top. We've had this conversation when I've been doing these presentations with you guys in the past about how impressive EEM in the emerging markets had been, right? We've been talking about that for months at this point. One of the more interesting developments since the Pfizer news last Monday, so not yesterday, but a week ago from yesterday, is that the developed foreign markets have absolutely skyrocketed. Take a look at this chart right here. This is EFA, so you're looking at a lot of the European nations and Japan and Australia and other developed countries around the world, not the emerging economies, but the developed ones. And you can see an absolute rocket ship that has taken place here. And remember, this is not just like one individual stock that benefits from it. We're talking about entire country indexes that are just absolutely launching higher here. We were looking at a situation just a few weeks ago where it looked like EFA was going to break down in a big way. Notice this move right here breached this prior low from back here in late September. And so I think I was talking about it at the time saying, hey, it's looking kind of bad right here because like the US, we didn't breach those prior lows in September. We came down close to them, but we didn't breach them. With EFA, we breached those lows, so it was looking more bearish at that time. And then also in comparison where I was saying that between the two, EEM is looking a lot stronger. Notice that EEM barely came down at all during that time period. It came down to its moving average and then bounced off of it. So of those three charts up there at the top, the one that has been maybe the most surprisingly impressive to me has been EFA. Generally, you're not going to see this type of behavior, but we had some very aggressive news in terms of the vaccine, and that's the type of news that can turn markets on a dime, and that is case in the point right there. The technical analysis was not looking very friendly to EFA just a few weeks ago. Now, all of a sudden, this thing is absolutely launched. Now, you can see here that both of the foreign ETFs here, EFA and EEM, are both outperforming the United States right now. So notice that the United States is up about 6.7% over the last 3 months. EFA is now up 7.24%, and then EEM is up 9.11%. So that's a bit of a flip-flop as well. Remember, for much of 2020, the United States has been the leading area. And the big reason behind that is because of our dominance in the information technology sector in the United States. You know, we have some of the world's greatest tech companies here on our shores, and we really kind of had this almost unfair advantage in a world that was kind of getting locked down from the coronavirus. Technology plays a big part in helping us kind of live somewhat of a normal life from our homes and be able to work from home and entertain ourselves from home and so on and so forth. So those tech companies really kind of kept the U.S. At a much better position than the rest of the globe. A lot of the other countries around the globe have dominance in maybe chemicals or oil or banking or something along those lines, but our claim to fame here in the United States right now is technology. And so it's interesting now to see that since the vaccine news hit with Pfizer last week, we've seen a bit of a role reversal there. And it's not that the United States is melting down. Obviously, we're close to all-time highs ourselves. It's more to the point where we're seeing extreme upside outperformance of the foreign markets at this moment in time. So keep your eyes on those areas. I know sometimes we've got the blinders on depending on which country we live in, and we look at only those investments that are within our shores. But in this particular case, the world is your oyster, and there's a lot of opportunities out there. In fact, we'll have that conversation here in just a second. But before we do, I did want to point out as well that the U.S. dollar is looking somewhat bearish at this point. Obviously, we've been talking about that for the last few weeks, so it's not a big surprise, but I just want to make sure that you're all aware that we are close to multi-month lows there on the U.S. dollar, and that can help support commodities. It didn't really help gold today, but you can see that gold does have a weekly bullish posture, even though it's trading below its moving average at this moment in time. You've kind of got the opposite effect on oil. Oil is trading above its moving average, but has a weekly bearish posture. So kind of back and forth between those two, trying to figure out which direction it wants to go. There's the Vanguard Real Estate ETF, VNQ, and you can kind of see why the rankings that I showed you a moment ago in the sector Selector are showing an improvement in real estate. We've seen a big bounce off of those lows here with a lot of those REITs that are out there as well. Let's quickly take a peek here at our sectors. And so that's going to be chart 5C for those of you following along at home. I wanted to point out that energy once again led the market today. We were up over 1% in energy. And boy, oh boy, has that happened in a hurry. It wasn't too long ago people were up in my grill about, hey, why would you ever look at any oil and gas stocks, right? And that's the reason. You have that opportunity for an immense rally whenever that tide does turn. The trick, of course, is figuring out when the tide is going to turn, and we've seen this happen multiple times over the years where it looked like oil and gas were really going to start, making a move higher, and then it eventually fizzled. So we can sit here and we can recognize that, yes, there has been a legitimate move in energy, but because they were so oversold, even this massive dead cat bounce that we've gotten in a lot of them still doesn't put us into a more acceptable territory. So we still are kind of in the wait and see game there. Now, in my longer term classes, like my dividend growth investing class, there we do focus on beaten down stocks. So we're willing to consider energy stocks. But in like my other classes, like my top down trend trading class, where we're looking for prior relative strength from a sector perspective, we probably still don't have enough evidence on the board to start turning our attention to that area yet if we're looking for strong trends. Right now, it's an impressive bounce, but we've got a long ways to go to turn the tide to more bullish activity within the oil patch there. In terms of the worst performers here today, it was utilities that were down almost 2% here today, but they still are above their rising moving average. And healthcare also struggled today. You know, I mentioned Amazon's impact in the healthcare space and maybe caused a little bit of a selling in some of those areas there. So healthcare was down a touch here today as well. But again, similar to utilities, above a rising moving average in that particular case. Now, real quick here on some of the major foreign markets that are out there. So global stocks primary 12 grid here. This is chart 5E for those of you that are following along at home. Look at the reversal in fortune here that we've seen in recent weeks. We've seen an aggressive turnaround. The only pink chart on the board currently is China. And remember, they already were kind of working their way up prior to the vaccination news. So they kind of had a head start on everybody else, and they're kind of, almost going sideways now. We did hear some more, onerous regulations on Chinese securities here in the United States. We also heard that the Alibaba financial IPO, Ant Financial, was pulled over in China here in the last couple of weeks. So maybe some of those individual stories negatively affecting China, but elsewhere across the globe, we are seeing rally after rally after rally. Notice that most of these charts were trading below their moving averages just 2 weeks ago. But after the vaccination news, boy, oh boy, they all just rallied strongly. Most of them close to their multi-month highs right now. So really impressive moves out of many of them. Remember that a few weeks ago we were reviewing this together, and I was mentioning that Japan, India, and South Korea all looked good compared to the others because the others were kind of struggling in downtrends. Today we wake up and we see that not only were those three good places to still be, but everybody else is catching up in a big way. So it's nice to see that healthy participation across the globe. It's not just a US-led story at this point. All right, let's get into our trade application example here for today. And I did want to focus on a bearish trade. Now, real quick over here on our monitor tab, I did want to address this as well. We've got an options expiration coming up this Friday. Remember, the November contracts will roll off the books this Friday. And we do have a number of trades that will be likely rolling off the books at max gain for us here. We've done pretty good with our trades in my presentations here. In fact, we're winning all of our trades right now, except for our 2 iron condors. Unfortunately, Delta and the health care ETF iron condors are underwater for us, but we are making positive profits on all the rest of our trades here. You'll notice like our Apple trade is at like 97% of our P&L, 98% for our Slack trade, and then in the low 90 percentages there in all of our sold puts. And those are the ones that will be expiring this weekend. So with Apple, we're just going to let it expire, collecting our max gain. Remember, we sold the 110, 107.50 bull put spread. It's trading at 119 right now. So as long as it doesn't fall $9 per share in the next 3 days, we're going to capture all of our gain on that. And we don't need to flatten our position. You're certainly welcome to, of course, but you don't need to. They'll be taken out of your account by your broker if they expire worthless, which I fully expect them to. With work, it was kind of the opposite. This is Slack Technologies. Remember, Apple was a bullish trade. Slack Technologies is a bearish trade where I sold a bear call spread with the 30 call as the sold strike. And so in other words, as long as this stock stays below 30, we should be in good shape. This one's trading at about 27 right now. So as long as it doesn't go up $3 per share in the next 3 days, I will anticipate us capturing max gain on that trade as well. And then with our 3 sold puts, Amgen, we're going to be capturing max gain if it stays above 205. Right now it's at 233, so we should be good to go there. MongoDB, as long as it stays above 210, we're good to go. It's trading at 248, so again, should be good to go there. And then Vulcan Materials, we are good to go as long as it stays above 120. It's at 140 right now. So in other words, we're doing pretty good with our trades here. And remember, it's not just because we're riding the wave of one market direction or something along those lines. We actually have a healthy mix. Most of our vertical spreads are bearish trades. Most of our sold puts, of course, are bullish trades. So we've got a good healthy mix of deltas in our portfolio right now. What we're going to do today is we're going to add another bearish delta. You can see the fill up here already. Some of you that have a good eye have already spotted that. And that's Activision Blizzard. So let's bring up the chart here and I'll show you kind of what I was looking at. Now remember, if you're a premium member of Market Scholars, I would have already sent you out the trade alert via our Telegram app earlier today, so that way it gives you an opportunity to consider these trades before everybody else who's just watching the free YouTube video later at night. Anyway, let's go ahead and pull up Activision Blizzard. Now, you heard me mention before that on the sector selector, we saw a little bit of a rotation out of the communication stocks as they fell from number 7 to number 6 week over week. And remember, a lot of the communication stocks also are kind of in that zone where they benefit from the kind of the coronavirus lockdown, as it were. This is one example of that. This is Activision Blizzard. For those of you that are gamers, you'll certainly recognize this name as it's one of the largest video game makers on the planet. And it was actually a very strong bullish trend for much of 2020. In fact, this is one of our positions in my top-down trend trading class that we bought a long time ago, but it's starting to fall out of favor there. So we'll probably be moving on from it here at some point in the near future. But anyway, you can kind of see how this has looked in the last 3 months, and it really doesn't look all that healthy. Right now, you see a stock that is easily underperforming the S&P 500 over that time period, with this dotted line up here representing the S&P 500, Activision Blizzard way down below here. You're also seeing that this particular stock is trading below its falling 30-day moving average. That's why that 30-day moving average is red in this particular case. And now you can also see that the background color of the chart is pink, and that signifies that on the blue near-term line for swing trading purposes, we would consider this to be bearish at this moment in time. Now, one additional kicker that kind of put this one on my radar today was the long upper shadow on Activision Blizzard. Notice that early today, it was rallying pretty strongly. It went all the way up here to its 30-day moving average. And if it would have held that level and closed there, that would have actually looked like a reasonably bullish situation from a candlestick perspective. But as it were, it actually ended up selling off through the rest of the day, closing near the lows of the session. And so that's not a very good look. When you go up to that resistance area, you kiss it and you bounce right back down, it gives you the impression that there's just not enough buying pressure to push it up and to break that downtrend. You'll notice that for the most part in the last 3 months, every time you kind of got up to that moving average or slightly above it, that's when it kind of tops out and it rolls over again. And it just hit its fresh low here in the last 3 months about a week or so ago at 71. And it hasn't hit a high since this 85 back here at the end of August. So if you expect this downtrend to continue, then one way to try to take advantage of that is by buying a put spread. And so that's what I did. I bought the 80-75 put spread. And so basically what I'm hoping to achieve with that is for this stock to fall below 75 between now and the December expiration. And if it does, then I'll make max gain on that trade. If it's somewhere between 75 and 80, then there's a variety of outcomes. I could either make a little or lose a little. If it goes well above 80, right, because there will be times when we're just flat out wrong with our analysis. And if that happens, that's the whole point of having a vertical spread, is you can define your risk. If this stock were to go above 80, we're not going to lose more and more money as it goes higher and higher. We'll still lose money, but we'll lose what we set out to lose. We know what our max loss scenario is when we start that particular trade. So we can kind of act at a position of confidence, knowing that we already understand what our worst case scenario is, yet if the trend holds up to the downside, we can make a decent amount of money. But this is a directional trade. This is not one where if it just goes sideways, we're going to be good to go on this one, like we are with our credit spreads. This is a debit spread, so we do need downward price activity in order for us to fully benefit from that trade idea. Okay, so that's what I had for you here tonight. Hope you enjoyed the presentation. If you got value out of a little bit of a deeper dive of what I took you through there with the Russell 2000 and understanding that cluster analysis over the last 3 months, or if you enjoyed hearing about where we're seeing more and more strength here recently, whether it's the foreign markets or the small cap universe, or whether you just like seeing these various trade ideas that I present to you, you can thank me one easy way. It just takes 5 seconds. All you have to do is click like on Twitter. All right. Until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.